We have Vivek Lohia, Managing Director at Jupiter Wagons, to talk more about that. Mr. Lohia, you are a very busy man right now. I can understand so much orders flowing in, very few companies competent enough to really fulfill them. But in the last few days in particular, it has clearly come to light that railways, even after 10 years of working in the direction, continues to remain a very specific area of focus of this government in terms of completely transforming, be it the wagons, the lines, the railway stations, everything. What is incremental at your end of the business? You interact with the ministry also very closely.
Good afternoon. As I've been stating that railway is not something new which we are saying over the last since this government has come to power. We are seeing incremental investments from the government in railway, and railway has always been a priority for them. The Prime Minister is very clear on his vision of making India a $10 trillion economy. And the only one of the instruments towards that is reducing our logistics costs, because India today is one of the most inefficient economies when it comes to logistics costs. Our logistics are anything between 30 to 15%. And railway is one of the key instruments in bringing that down. So the government's focus is clearly there, and to that end, we are seeing a lot of debottlenecking which is happening from the government. And yesterday, what our Honorable Prime Minister announced, I think, will go a long way towards that. And we are, as a company, we are already committed towards investment, not only in the wagon manufacturing, but now in the other domains in terms of the brake business which we are doing. The export part of the business, as you are aware, that we have substantial collaborations with global companies where we are going to make India the manufacturing hub. I think the PLI scheme, which the government is now working on the railway sector to bring in technology in railways and localize it further, that will give us a big boost. So Jupiter on our end, I think we are right now on a fast track in terms of investments. And over the next 3 years, we have lined up, I think, investments of close to anything between 1,500 to 2,000 crores of additional investments we are going to make towards the sector.
Sure. So 1,500 to 2,000 crore worth of Capex plan you have lined up for the next 2 to 3 years. But I just wanted to get a bit more specific. If I have it right, your order book by the end of the quarter was around 6,210 crore rupees, if I have it right. Could you talk to me about what more is in the pipeline? What kind of order inflows can we see? Because we hear from sources that there's a 40,000 wagon order which is lined up to open soon as well.
Yeah, you're absolutely right. So I think that order is going to be here shortly. And honestly, for us, it's not about the wagon orders are going to keep on flowing in, because the biggest challenge was on the infrastructure side. And that is now the focus of the government, and they are constantly addressing that. So once you create the highway, so the real infrastructure is the highway. I think once you create the highway, transportation through railway becomes the automatic choice for any industry, because railway has a very distinct advantage over any other mode of transportation today which is available in India. So we are very confident of the incremental demand for freight cars which are going to come in. The way we see it is in the next 2-3 years, the country will be requiring anything between 150,000 to 200,000 new freight cars. With now the new designs which are going to be introduced, railway is going to upgrade the freight design. We are going towards 25-ton axle load with higher seats.
Sure, no, Mr. Lohia, take your point. But my question to you is, of course, the infrastructure is increasing and everything is in place from the government's perspective. My question to you is, what could come your way? What kind of order inflow are you envisaging in terms of the order book, the revenue growth? Could you talk to us about potential for you? Because that potential is not just for you but for others as well. And with PLI schemes, it's expected to get a bit more competition into the system.
So, in terms of order book, as I have said earlier also, today we are delivering close to about 600 wagons a month, and our target is before end of this year to take it up to about 800 wagons. And the order pipelines are, it's not only from the government. From the government, as you're aware that there's a 40,000 tender coming. Then there's a global tender also, which is in the pipeline of close to about 10,000 wagons. But if you look at from the private sector perspective, quarter on quarter, whatever we are delivering, the incremental order books which we are getting is much higher. So our target is by end of this year to take our capacity up from 600 to 800 wagons, and by next year we want to supply about 1,000 wagons a month.
Okay,
I
1,000
think
wagons a month by next year would be a run rate. And meanwhile, you're also diversifying your revenue base by going into newer products over and above wagons. So in the next 3 years' time, what kind of a top line number are you aiming at, and what kind of margins would it result to?
so again, we are not in the business of giving forward numbers, but as I've mentioned that we are going to invest substantially in Capex. We are looking at about the 1,500 to 2,000 crore Capex, and that's going to go towards expansion of our foundry business. We are planning to set up our own manufacturing line for wheel sets, which are not only going to cater to the Indian market, but we also plan to export to the European market. As you are aware that Tata Wagonka, they are the biggest manufacturers of rail freight cars in Europe. They are a partner in Jupiter Wagons. So in Europe itself, there is a substantial demand for wheel sets. Beyond that, we are expanding our brake business substantially. We are going to be starting exports very shortly, and that with the PLI scheme, that is also going to give a huge boost towards that. So
But
I think,
I want to
yeah.
understand from the management point of view on aspiration which you have set for yourself, these measures which you are talking about, what is the potential of this coming through?
So, honestly, we are very confident about the path, the journey which we have taken. And I think, again, once the Capex and all come in and we start seeing the results, it will not be a surprise to me if we can, we are in a position if we can double on our revenues also.
Your
So,
revenue.
so today what we are doing, so I think there is a huge run rate which is ahead. So again, to give specific numbers, it's going to be very difficult. But yes, we are looking at the run rate which we have maintained over the last couple of years. We want to sustain that.
But this you're potentially doubling your revenue in 3 years is good enough. But would your margins also go up in this the next 3-year period from here on? What's the potential of expanding your margins with better revenue mix?
See, as I've on a co-freight business, I think we are going to consistently maintain these kind of margins. But yes, as we add the incremental products, say on the wheel sets, on the brake systems, I have been very consistent that they will definitely have an incremental impact on the margins. So going forward, as these businesses start contributing, you will see the impacts on our overall EBITDA margins coming from there.
Okay, thank you, Mr. Lohia, for making time and speaking with ET. I appreciate you joining us on the show. Just wanted to talk about a couple